Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel O'Connor, and Dennis Dick with you as always. Busy day today. 3 guests again. First up at 8:15, we'll be joined by Karen Barker-Gentile, the president and CEO of DASTrader. They're a trading platform and order execution management service. At 8:35, we'll be joined by Christian Fromhertz, founder of Tribeca Trade Group. And then at 9, we'll be joined by Ben Axler, founder and CIO of Spruce Capital. They are a short selling firm. All 3 of these guests will be at the Benzinga Trading Summit tomorrow. In between those guests, before those guests, we have a lot to get to. Of course, it's Fed Day. That looms large over everything. So we'll talk about what may or may not happen today with that. We have a couple of earnings and guidance headlines as well. The late headline yesterday on Facebook regarding their new cryptocurrency and some potential regulations. We'll talk about that. So a lot to get to. Let's roll with it. Joel, what's the word here overnight? Oh, I had you on mute. Sorry about that, Joel. Try that.
Okay. That wasn't me.
No, that was...
S&P futures are unchanged at 26.25, a tidy 10-point range. 30.5 is your pre-market high, but we don't care about that. We care about getting through yesterday's high at 29.3650. After that, things open up, and all-time high for the Super Bowls out there, 29.6775. On the downside, pre-market low, 21.75. Not much there. We'll see what happens if we take that out. Crude in the green here by a couple pennies at 54.13. Gold in the red by 370, just doing the old shake and bake at 13.50. Silver down 4.8 cents at 14.94.5. And I saw Bitcoin. I'm looking at the futures here, folks. So if my prices are off a little bit, don't worry about it. I saw it lose, boom. Yesterday, 9,000, but back above 9,000.
10,000, guys. You Bitcoin bulls, I'm with you. I'm with you right now, anyways, in the short term.
All right. So,
I'll let you know when I get off the bull train.
Okay, we will. Triple D, how you doing? Are you looking forward to your vacation?
My vacation to New York City, where I work and lecture and speak as fast as I possibly can. Yes. They've got me. So I've got the 9 minutes on the big stage. And I'll tell you, I worked yesterday. It started, I put a presentation together and I went through it and I was like, okay, this is a half an hour. This isn't going to work. So then I slashed about 10 slides and it was still 20 minutes. And I slashed about 10 more slides. And by the end of it, when I speed through it and talk like the Micro Machine Man, I can get it down to 9 minutes.
I'll take the over.
I'll take the over. And I have to introduce Whitney Tilson. So that's going to take 30 seconds at the end there too.
Well, I'll tell you, I saw the presentation, folks, and this is going to be at the main room at 4:40. If you are not there and you are not paying attention and taking notes, you are going to miss one of the best trading presentations.
Don't build it up like
ever.
That. It's not. I've never even done this before in 9 minutes. I go on tangents for 9 minutes. I'll probably put the presentation up there, go on a tangent on the first slide, and not get through any of it. So don't put too much pressure on me here, Joel.
Jason told me.
I don't know speaking in front of public people.
Oh yeah, you only do it to like 2,000 people every day. Jason told me I may have to go up and tackle you to get you off stage.
He might, yeah. You know, they got that big hook, you know, and that'll come across and just pull me off. And they'll be like, oh, by the way, Whitney Tilson's coming.
All right.
But you know what's even funnier? So in the trading lounge, so I'm like looking through, I'm on the Benzinga site, the Summit site, looking through it just a couple days ago. And I was under the impression that I'm kind of like bounce around, you know, do a lot of one-on-one, which I'm going to do. Obviously, we're doing the pre-market prep show, maybe do a couple little, you know, presentations on the side to a group of people. Then I look and I'm like, oh, I'm scheduled for 1:30 to talk about the laws of pre-market trading. I was like, nice of them to tell me about this because I didn't even know about this. So yesterday I put together a pre-market presentation as well. And this is going to be 30 minutes in the trading lounge. I'm going to talk to you about my daily routine go through in specific detail of how I prepare for every single trading day. And obviously, you know, we talk about a lot of this stuff on pre-market prep, but I'm going to go through the details where we get the information, and hint Benzinga Pro. But we get, you know, and we're going to talk about a whole bunch of stuff there as well. And obviously, we'll be bouncing around that trading lounge, answering, meeting a lot of, hopefully a lot of our chat members, meeting a lot of other people, and obviously talking at one-on-one and helping traders to, you know, get through and learn more about trading.
And you will not be telling the lazy boy story, number one. And
no, that takes 20 minutes.
And number two, I was talking with Bill.
Lazy boy story today?
No. Let's go. Come on, we got a lot to cover. We got a guest in 9 minutes.
Let's go. Lazy boy's down 10%. Whoa, what?
Well, let's start with the Fed. Come on. I mean, it's Fed.
Fed's dead, baby.
Yeah, right.
Fed's dead.
Jerome Powell.
The Fed's dead. We heard it yesterday from Trump. If Powell doesn't do the right thing today, he's in a lot of trouble. So I'm just saying, this should be the title of today's show. The Fed's dead.
But what is the right thing cutting rates, or is the right thing saying they're going to cut rates?
You better say it right, because Trump's on the hunt. Did you see what he said? What was the question from the CNBC? From what was the question? Yes. What do you get? What are you thinking about? You know, putting Powell. What was the specific question? Anyways, he said, "We'll see how Powell does today."
Yeah.
Gary, Jerome Powell, do the right thing, or you're going to lose your job. It's basically what Trump just said. Okay. What? Talk about backing the Fed into a corner.
I know well, we know they're not going to cut in June, and it all depends what they say about July. And
we don't know. We don't know they're not going to cut today. They could cut.
They're not going to cut today.
They might have to. Trump just basically said he don't do the right thing today. He could lose his job. That's what he implied.
Spencer, if they cut today, I'm going to grow a beard like yours.
Okay.
They're not cutting today. They're not cutting today. Are they going to be dovish? Are they going to be hawkish? They're going to be probably dovish to a certain extent, but I don't think this
data dependent,
unexpected. But after the commentary from Trump yesterday, I think the rate cut. Anybody that thinks they're cutting rates today, I don't think they can, because if they cut rates today, it's going to be like, okay, well, Trump told me if I didn't do it, I was going to lose my job. That's what it's going to come off as. So he kind of backed the Fed into a corner, and they can't just come and, okay, well, I guess we got to cut rates just because Trump said so. I think they can't cut today.
All right, let's get some news, some
and
earnings.
Why do they need to cut? Seriously, Spencer Israel, why do we need to cut? We got the S&Ps kicking around all-time highs. This economy looks like it's booming pretty good to me. Why do we need to cut? What does the data say that we need to cut?
I've been asking that question for 2 months.
I don't understand how we went so hawkish and now we're so dovish all of a sudden. I don't understand the data. Tell me, please, somebody out there, chat, Twitter, why do we need to cut rates?
The only thing I've seen is like when we got that weak jobs number, right, last week or whatever it was, a few weeks ago now, I don't even remember. And the market reacted positively to that because it hinted that there could be a rate cut. The market has already priced it in at this point, so it has to happen, right? If it didn't happen, then that means the market would have been wrong.
And the likelihood today is very low. So what did you have the odds at when you were looking at it, Joel?
It was like 20% or something.
Yeah.
It's not happening today. It's zero now. I don't think there's any way anyhow it's getting cut today. But the question is, are we cutting in July? That's what we want to see, some dovish, and they want to see it potentially cut.
Well, I can tell you one reason why we may need to cut a little bit farther on down the line is because he started a trade war with China, and that's hurting a lot of U.S. companies and can eventually hurt the economy. So, that's it. We'll see what happens. Both you and I will be flying at the time that it's announced. So we will break out our phones right as we land and find out what the Fed decision is and really what their tone is moving forward. Dennis, you had some action after hours yesterday.
I did. I'm going to 1 second here. I've got I'm going to have a break in here because my kid's at the door. So.
Oh, man.
This is what happens when you're doing your show from your cottage.
All right, so
you guys are going to talk for 1 minute here. I got to go deal with the kid.
Fine, go.
Kids take precedence over pre-market prep. Sorry.
The headline we're referring to is the U.S. steel guidance from yesterday. They issued some new Q2 guidance, adjusted EPS of 40 cents versus a 52-cent estimate. So issuing lowered guidance yesterday. This is at like 4:39-ish p.m. At the close or after the close. And their adjusted EBITDA for the Q2, $250 million. So that's a guidance cut, 40 cents versus a 52-cent estimate for U.S. Steel yesterday after the bell.
Okay, I traded this on this news. What do you think I did? They have a guidance cut. What would logic say you should
get short?
Yeah, but you know what? I've seen this play out. I said to myself, I've seen this play out twice already. Nucor cut guidance. Stock sold off, rallied. We also saw AKS, I believe it was, cut guidance. Stock sold off. Was it AKS or STLD?
I think it was STLD.
2 out of the 3 already. Cut guidance and then proceeded to rally. So I actually was thinking, okay, well, if it sells off, I'm going to buy it because we've already seen this play out twice before. And so it started coming in, traded down to the low 14s.
Got it.
I bought some on the way down, didn't even wait for it to start bouncing, bought it on the way down because I'm like, it's probably going to bounce because that's what the other ones did. Threw up a little bit in my mouth when I traded down, I think, to 1380. I was like, uh-oh, maybe I'm wrong. But about 10 seconds later, it was back up over 14, then 1450, 1460, and went right up. So I made a quick 50 cents on it just because I was paying attention to what happened in the last ones. Took a little bit of heat there just when it went under 14. I probably should have waited until it came back up as opposed to just being, a hero and saying, well, it's going to bounce. You can get yourself into trouble that way. And if they decided not to bounce, I would have been in trouble. But I played it that way just because and Nucor, and I believe it was Steel. There was 2 already that had reported that had lowered guidance and bounce. So I thought X was going to do the same, and it has. Now I'm already out of the trade. I probably should have held it because I sold it much lower. But we know Alex, I have the FIFO where I'm first in, first out.
Yeah, you did get that pre-market low. I'll give you the pre-market high, 1535. We're bumping up against, it seems to be a little bit of seller here between 1510 and 1535. That's been holding up for the last several brackets. You had a nice little clean breakout there. You had a lot of highs just at 1430, but we took that out. Let me see if I got a daily high for you. A daily high in the 15 handle. 1522 was your May 16th high. We struggled over 15 back in May. So we hold 15, maybe we'll take a look at the 16, but I think it's very important, especially since it's bad news, to hold 15 off the open.
I think it's going to rally here again today. It's already rallying. I'm a buyer of pullbacks. I think the low is in it, but that little double bottom, 1167, 1187. When companies start lowering guidance and they rally on that, it's telling you if you're shorted, it's time to cover. So when stocks stop going down on bad news, it's telling you that, maybe this has just been overdone. I mean, we know the steel
short squeeze
has been awful. Things can change. We don't know if they're going to stay in favor forever, but right now, I think the steel stocks are back in favor. I'm bullish steel.
Yeah, you've been looking for a short squeeze in this since like 17, so maybe
get it today.
Okay, a good old short squeeze. Let's sneak into Facebook news here before we get our first guest.
Well, yeah, I'm actually waiting for Karen to join us on Zoom here, so we'll keep going definitely until that happens. But Facebook, one of those headlines that I guess in hindsight seems obvious in the yesterday morning, but of course Congress wants to have their say. So this broke yesterday after the bell that U.S. House Banking Chairwoman Maxine Waters has asked them to pause the development on Libra until Congress can review what the hell it actually means and how it's going to work. I guess, again, this was to be expected.
I want to thank Charles from Benzinga for this one because I listened to my Benzinga Pro, and Charles broke this headline pretty much quicker than everywhere else. It was sitting there, 188.50 bid. I was like, oh, okay, I guess I'm going to short this. So I was actually one of the first people to hit that. Waited a few seconds, and I was like, is this not going to sell off? And then boom, 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 boom. And then it started selling off. So if you think you can't trade headlines, Charles just proved you wrong there yesterday. Good job, Charles, Benzinga Pro, given that at least 5 seconds it felt before the stock even started trading. So I was able to make some money off of it. Obviously, scalper blood me first in, first out. I'm already out of it. But I think I was in the trade for probably less than a minute. But it was a quick 70 cents.
You're going to get to meet Charles also. Dennis.
Excellent. I can shake his hand and say thank you for the Facebook money yesterday.
Yes, exactly. I guess they didn't check with the government first before they did this. So that's kind of obvious now. We'll keep an eye on the closing price. The closing price is 188.47. So Anita, get back over there. Your 2-day close is 189.01. I don't see us going back up to that 194.53 high from yesterday. I think we talked about that in the on the show that was the pre-market high, and also it was a daily high going back to 194 was your high on May 2nd. So I think little people may be caught on this. So I think you're going to find some sellers on the way up.
I don't know. And I think this is going to be a headline they're going to shrug off. I think, this thing got hit yesterday. It obviously got overdone. It was getting way overdone. We talked about it on the show. I thought it was a little overdone at 185. It decided to almost go to 195. So now it's back here 187, kind of, you get back to the 185 area. I actually think the story is still developing. I think it's giving some life back to the Facebook stock. I think you actually find buyers on the pullbacks here. So I'm more trying to buy pullbacks than to sell rallies in Facebook. Still long in my long-term account.
You said you were thinking of dumping it.
I thought of it just because it was so overdone. And you know what? It was a blow-off top in a lot of stocks yesterday. We should just quickly talk about that because Beyond Meat topped a lot of stocks. That was the blow-off top. Whether it was buy-ins, we never know. And Kramer, said, it's buy-ins, but everything is speculation because you don't really know. I mean, it's anonymous, right? You don't really know who the buyers are. At least it should be anonymous. If it's not, there's a problem there. But, it looked like buy-ins there. And what we mean by a buy-in is people who were actually short the stock and the brokers couldn't get the locates will go into the account and actually buy the stock back because they got to be in SEC compliance there after the 2-day settlement. So BYND, it looked like buy-ins yesterday. It looked like it was a blow-off top. I think that was the blow-off top, the 200 to 201. I think rallies now are to be sold in BYND, in my opinion. I think that was the top. But, we look at a lot of other stocks yesterday, like Zoom started to give some back. Some of your growth names were actually weak yesterday. I know it was a crazy tape and you think everything was up, but it wasn't. There was a lot of rotation yesterday, a lot of rotation from growth to value. You saw a lot of those names like General Electric getting some life. You saw names like IBM showing some life. And the defensive stocks are a different story because they've already showed life. But it was kind of like maybe not even from value or growth to value. It was kind of a rotation from the leaders to the laggards. That might be a better thing to say because obviously Procter & Gamble and different stocks aren't really, growth stocks either. So I would say it was kind of a rotation from leaders to laggards. Yes, there was still some up. But, I mean, you've got to be aware of these rotations when they start to happen. Facebook was probably a victim of its recent success, too, yesterday and ran just too far, too fast. It needed a pullback.
All right, I want to pause this conversation and bring on our first guest of the day, Karen Barker-Gentile. She is the president and CEO of DASTrader. Karen, good morning. Can you hear me?
Yes, I can. Can you guys hear me?
Yeah, we can. How's it going this morning?
Good. I'm doing very well. How are you guys doing?
We're doing great. We're doing great. We're like everyone. We're a little nervous about the Fed today, but that's okay. we're working through our anxiety. First of all, you're going to be at the Trading Summit tomorrow. Can you give us a quick sneak peek as far as what we're going to talk about?
Sure. So we're going to be doing a live trading demonstration of our DASTrader Pro platform. Pretty much, I'm going to have one of our power traders that use our technology demonstrate how to use the software, and he's going to be doing it in his live account. So he's going to be doing live trading in a demonstration mode in front of a whole bunch of people. A little bit nerve-wracking, but he's very confident that he can show that this technology is a very solid technology, and he just wants to show that you can make money trading this technology.
Let's back it up here a little bit, Karen, and give us just a tad of your background here and kind of the evolution of this product.
Okay, sure. So DASTrader, our technology was started in 2003. Originally, it was an algorithmic technology intended to trade algos and strategies. We co-located it within NASDAQ because we wanted it to be as fast as possible. And we just never changed that mind frame in removing it from NASDAQ. So we've been in the NASDAQ co-location for over 15 years. And so it has evolved from being simply a order or EMS system, an electronic messaging system, to an order management system, as well as a trading interface that traders can use. So it's a very powerful technology. And, but the very fact that because it has these direct access routing capability and also direct access to the exchange, it's as fast as you can get in terms of trading.
And what about for what type of trader? Is this for an institutional trader? Is this for, a young person that wants to make the move up from Robinhood?
Yes.
Who's best suited to use this platform?
The thing about our platform is that it's very unique. It is intended for any type of traders. So we have the Robinhood types that are essentially moving from a web-based basic system to something that a little bit more robust, that has hotkeys, hot button, alerts and triggers, intraday charting, all of that stuff. So, the interface is quite easy for them to transition from a basic interface to slowly learning a platform that everything is already integrated. You don't really have to spend way too much time trying to figure out how to link your charts, how to link your windows. In the same light, an institution can use our platform because it has the robust background on order management and completely supports all the order types that the exchanges offer. So it's intended for a beginner, midway, or an institution. It just depends on how you want to use the system.
And talk about some of the back office management and the reporting skills that your software offers.
So our technology, it can be, there's 3 different levels that you can use it as. You can use it as a trader level, which is the basic, order management. You place your orders, supports all the trading functionalities and strategies that the exchange offer. And then there is the manager level where you can manage several accounts at the same time. Say you're a broker and you have a whole bunch of customers that you're managing. There's that functionality as well. And then there is, of course, the risk management portion, which complies with all the exchange rules. Prevents the circuit break-in, so you can't, violate the rules of the market. So it has those 3 levels components within the software. It is a system that can, it's a one-stop system if you're a broker dealer looking for a platform to offer to different types of traders, as well as use in-house for yourself.
And so is it customizable? I mean, is there, people like to trade different stocks using different strategies, different risk parameters. How customizable is the program?
It's very customizable. You basically can build your own layout from the very beginning. You can start fresh, or you can start with the basics. So, it's fully customizable. The hotkeys, I think, are one of the best functionalities of our platform because our hotkeys are very customizable. It's almost like writing script, but we make it so easy that it's really not that hard. And because our system is so fast, you press a button. If you're a hotkey trader, it's the great platform for that. If you are a trader that is more inclined to click a button, then you want to use the hot button functionality, which is tied into the hotkey command. So you can actually build a strategy using that, and just by the click of a button or the click on your keyboard, you can execute your trades very quickly.
With all this functionality, I mean, a lot of times people are running, their order execution system, they're running news platforms. With all this functionality, does it potentially bog down? Like, do you need to run this on a separate computer, or can you, easily compatible with other trading systems or other things that the traders use?
DAST is a very light platform. It's about 4 megs to install on your computer. So it takes up very little space-wise on your hard drive, and it really doesn't use that much memory. What you want to have is a decent connection to the internet, because we are connecting through the internet. And because we're in the colo of NASDAQ, which is in New Jersey, you really do need to have a decent internet bandwidth. But in terms of running other application, it doesn't use much memory or hard drive or resources, so to speak. You can run your separate, resources that you need for trading, although the DAS platform does have news integrated and as well as technical analysis. But you basically have all already integrated in the platform. But if you do want to run other applications to help you make better decisions, you can do that very easily with DAS as well.
Karen, well, what would you say is the most in-demand data set, functionality, feature, whatever that traders that you talk to ask for or use the most frequently?
Most of our traders are level 2 traders, and that's what we're big on. So the display of market depth, that is something that we've always been a depth provider of market data. We're not necessarily a level 1 provider, although we do have that. But the depth of the book, I believe, is the most important feature that traders really need to see. They need to see what's going on in the market at different levels. So I would say that that's a very important component. Another important component is to have some form of signals as to what's happening in the market in real time. So trade signals of some sort, scanners of, that scans the market and tell you what's going on. DAS does have basic scanning functionalities. However, traders have used DAS with other scanning tools as well to help them make that decision. But the most important features of DAS is that it is very fast for execution. So you don't really want to have a platform that you're sitting there placing your orders and you're not getting filled as quickly as everyone else. So that is the beauty of DAS. That is where we're the strongest, is that we are offering very fast executions for traders. It's, you think about it, starting from an algo background, we're parsing the information real quickly. We're making your decision very quickly. So, that is our strong point. And I think that traders like that. They like the idea that they can have a fast execution rather than their orders sitting there and they get stopped out, or they miss out on a trade because they couldn't get in or they couldn't get out of a trade.
Two-part question here. Can you trade stocks, options, and futures on it? And if someone was interested in trying out the platform, how can they do that?
Sure. So you can trade stocks, options, and futures as long as your broker supports that. So we have many brokers within our broker network, most of which tend to only support stocks and options. But we do have a few that can execute futures as well. If someone wanted to sign up for our technology, we offer a 14-day free trial for anyone on our platform, or anyone that is interested directly from our website. There is no commitment or any, they don't have to put up their credit card or whatnot. They can just simply sign up with their name and their email and instantaneously gain access to our system. And it's real time. We're not delaying the quotes. They're getting real time market data during that 14-day trial.
All right, we've been on the line with Karen Barker-Gentile. She's the president, the CEO, the co-founder of DASTrader. As I mentioned at the top, she'll be at the Benzinga Trading Summit tomorrow. Karen, we'll see you there. And in the meantime, have a good rest of your day in the next 24 hours.
Great. Thank you, guys. And I'll be happy to see you guys there as well.
All right. Have a good one, Karen. All right, 8:29 here, guys. What are imbalances?
Thanks, Karen.
In a few seconds. What are we seeing here? Anything changing or same old?
45 seconds to the imbalance data, so we don't have that yet. But S&Ps are just sitting quiet, calm before the storm, the calm before the Fed storm. That's what we're seeing here. TLT is weaker here today. One thing to consider when the TLT is down, usually banks will be up. Banks yesterday, what a turn.
I know. I was going to try and talk you out of that one yesterday because I know that you were in Bank America.
I was long it.
I know. And
You're going to try to talk me out of being long it?
No, out of rushing out of it.
Oh, I rushed out of it. I got basically nothing on it. So I obviously should have stuck with it. Unbelievable turn. TLT was way high. Banks opened weak. TLT started to come down and the banks started going up. There is such an inverse correlation there. If you look at the open, the TLT opened right at the highs, tanked almost $1 in the first 20 minutes. The banks opened right at the lows and just went straight up. Like, look at the XLF, 27 to 27.30, straight up. I mean, a vicious short squeeze there. So incredible movement there for the banks. I got out way too soon. So I made a little bit of money, but I did not anticipate that kind of move.
I mean, you're going with the percentages on that, you know, and I just didn't
I
know.
was hedged too. I had Bank America versus the XLF. I was long Bank America because it was upgraded against BMO. So, you know, I was hedged going into it, and
Right.
I lagged the hedge wrong. I messed that trade all up.
Okay, it's all right.
I did not see that one coming.
No, that's okay. So now, ding, 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 8:30. We do get the imbalances now, and the only thing they're really going to have is a seller of 100,000 in GE.
Yeah, and exactly right. 105,000 to sell in GE. Keep this in mind. GE had a good day yesterday. Sets up well for the 2-day move. If we're looking at the book, I'll just go grab it. I bet there's some size at 1050.
Oh yeah, I got to talk about that 1050 level.
Let's look. Okay, data 369,000 shares. Yes, at 1050. It can chew through that though. I think it doesn't get through it at the open. I think it gets through it a few minutes later. So I'd actually looking to get long for just a day trade, but it might be looking to get long GE on the open.
Yeah, this is a tough one. I've been looking at this 1050 level since the end of April. You had a big rebound one day. Actually, you had a close at 973 on April 29th. You went to 1053 that day, and there has just been a brick wall there. 1049, 1050, 1050, and then recently. Now, one thing that we do talk about is it is getting a running start into it, right?
Yes, that's why I think it's going to take it out.
So it could take it out, but it's one of those, whoops trade. If you take it out and, the sellers are stacked at 52, 53, 54, 55, then you come back under that 1050.
Big level
for today.
The level of the day.
The level of the day in the entire stock market. This level is more important than the Fed decision.
It is to GE shareholders here, though. Get through the 1050 and hold. Then you got 1060, 100,000 shares. You always got it done in the book. But then you kind of got some room up to 1090, where there's another 400,000 shares. And at 11, you got a cool 844,000 shares. Remember, we're 8:30 in the morning, so those are going to grow. So 11's going to have more than 1 million shares there. I mean, it takes 11 million bucks to take that out. Just do the quick math on it. That's the whole thing. So, it takes to take out the 1050, 370,000 shares. It's going to take about you're talking about what? 4 million bucks.
Yeah, we'll see. I mean, like we said, it's getting a running start here. Let's look at just Chewy real quick, and let's bring in
Kramer kickstarted this one.
Okay,
and I am kicking myself. I bought it on the Kramer. Kramer said he thinks he can. It was on Mad Money 2 nights ago, and Kramer said, "I think you can buy it here." And it started lifting when he said that. I bought it when he said that too. I sold it first in, first out, obviously way too soon. I did not anticipate a 10% rally yesterday, but I will say a little bit of that rally was to do with Jim Cramer giving it the kickstart there because he said it on Mad Money that night, and I watched it lift on his comments, and it never stopped lifting.
Let's bring in our Chewy analyst, Spencer Israel. Spencer, what do you think?
Actually, I did see it this morning, like a couple hours ago, and I thought, oh, wow, it's back at pretty much where I sold it at, well, more or less.
A little bit lower.
But I was like, oh, I could buy here. What the hell? I'm not gonna yet, but I'm thinking about it.
It's been kind of, I mean, it had that big day on the first day, and I'll just bore you guys with the 50% retracement. Let's call it the 9-point move, 4.5. 36.5, 37.25. That's just eyeballing it here. And pretty much that's where we're trading. So it holds that. I'm bullish for Chewy here to go back and test that high. Big day yesterday, one big candle yesterday. No, absolutely nothing about the fundamentals, but let's see if we can hold that 50% retracement area. Had another stock that was in the chat earlier, and what was it? Was it Zoom? I can't remember what it was. Let me take a quick look. Yeah, it was Zoom. Nice consolidation here. Did it crater with the Beyond Meat yesterday?
It did a bit, though. It was trading up, and if you look, you can see the candle right with Beyond Meat. Zoom opened up like 101 and actually went down to almost $97. So fell almost 4 points along with Beyond. Pins, too. I was long the Pinterest. I sold the opening tick because I already saw Beyond. Pins was slow to open. There was an opportunity there. It was about 3-4 minutes after the open before the specialist or the designated market maker, as they call them, on the floor actually got the stock open. And you already saw Beyond, they were taking profits. You already saw Zoom, they were taking profits. I was like, oh, man, they're going to do it to Pins, too. So I sold the opening tick. I was long it Wish I would have went short, but I wasn't that smart. I didn't reverse the trade, but I did get on the opening tick, which I think was 29.75, which I believe was right at the high of the day.
I want to bring on, actually, before I bring on Christian, I want to highlight a tweet that I just read. Great insight from Charlie Bilello here. He's a good fellow on Twitter.
I like him. Following him.
He just tweeted a screenshot. This is the 11th FOMC meeting under Powell. The S&P 500 has closed lower in 9 of the 10. So
this sets up well to close lower too, because we've run up into it. They're backed into the corner, and like Joel was saying, if they don't say really dovish commentary here, or if they say anything about being more data dependent and waiting, that could spook the market here. So you know what? I kind of think this sets up well short into it. Maybe I'm going to be wrong, and I'm obviously going to be on an airplane at the time of it, so disappointed about that, but out to New York, so I won't be trading it. But I kind of think it sets up well from the short side going into this meeting.
All right. On that note, I do want to bring on our second guest of the day, Christian Fromhertz, from the Tribeca Trade Group. Let me see here. Christian, are you with us? Good morning.
Good morning. How's it going, guys?
Fix your I got a great view of your keyboard here, Christian.
Oh yeah. Well, I'm not ready to be on.
He hasn't shaved yet. All right. There's no sell buttons on there. There are no
sell escape key. You hit the escape when you're in trouble. You know, it's out there.
Can I share my screen instead of going on video?
I believe you can. But
we're still learning how to use this Zoom thing.
In the meantime, I do want to mention Christian is, no joke, one of the best follows on finance Twitter at @CFromhertz. Seriously, there's like 20 people in my tier 1.
Is that all you follow? Is 20 people, Spencer?
No.
Tier 1.
Snobby.
In my tier 1 class, best Twitter follows. I follow 10,000, but
nice, thank you.
He's in my tier 1. If you're into finance,
I follow 800, and Christian's definitely one of them.
If you're into ETFs, especially, which I am, he's a great follow. He tweets out fund flows left and right. So I just want to say that Christian, great follow. We'll be at the summit tomorrow. So anyway, with that said, Christian, how's it going?
Thanks, guys. Glad to be here and excited for tomorrow's event. Happy Fed Day, guys.
Yeah. Now, are you going to get a screen share up here? Because man, you are right on, spot on.
The keyboard look.
Yeah.
I want to see what he's doing.
Let's see. Let me see if I can get. Should I try to share now?
Sure.
Go ahead. They don't want to see our mugs.
Let's see. And if not, we can just roll with it. Oh, look at that.
Here we go.
How's that? Does that work or no? You guys see?
Starting to see something.
Yes.
We got your Bloomberg up there.
All right.
We're not supposed to show that, though. Only Benzinga.
Never heard of it.
Oh, sorry. Well, so, yeah, I mean, just as you guys were talking about, a few minutes ago, I think just the expectations are crazy high. I mean, there's still a 22% probability for today, which I just don't think that meshes with reality. And same thing for July. It's an 80% chance. So it just feels like today is kind of setting us up for failure. And the stats that you guys said they're right on. I think there's some and I do like being an optimist, but I think not for today. Given those stats that you guys just mentioned about how many times Powell has spoken, and the market hates Powell, in terms of the reaction that happens once he starts to speak in that press conference.
So how are you playing it going into the Fed 2:00? How are you playing it?
I think just overall lighter. I did put on a SPY hedge yesterday. Okay. I may, if we happen to get some type of rally, because we usually get the whipsaw rally, right? That's usually one thing that I always notice on Fed days is we get that whipsaw movement where we start to go. We don't always go the first direction, right? So sometimes it's like, oh my God, the equities are starting to rally. And then all of a sudden we do kind of an about face and we turn and we go lower for the day. So that's what I would be watching. I would almost welcome a first move lower, because I think that first move is always wrong, or a good probability. So, I think having a hedge on makes a lot of sense given these expectations are crazy. What do you guys think? Why do you think that they would be all of a sudden everybody's gotten on the bandwagon? Do you think it's just because that one bad jobs report?
Yeah, I think it's just, again, that the Fed has been proven again and again to be more market dependent than data dependent. And, we started going straight down in December and they got spooked, and they've been dovish ever since. And I don't think the data was ever there to start getting hawkish here. I can't understand where they're coming from here, besides, Trump putting them into a corner as well and basically saying to Powell yesterday, if he doesn't, talk dovish or doesn't, cut interest rates here, that he's going to get fired. That was what he implied yesterday. I mean, it's ridiculous. So I don't know. Fed's in the corner. I don't know how they're going to react, but I don't understand the hawkish tone either.
Maybe Trump has some pictures of Powell that we don't know about.
I don't know. I don't know what's going on, but it's going to be a very interesting meeting. Yeah.
Okay, so we talked about some individual stocks there. Did you want to say anything more on the Fed, Christian? I didn't want to cut you off there.
No, I think that's fine. I mean, I think also, I think TLT, as you mentioned, TLT is a little bit soft this morning. I mean, I think from the standpoint of what it's been doing, I think actually TLT might be a good short today, because if they're not dovish, we certainly saw what happened with the ECB yesterday, right? The ECB basically, Super Mario comes on again and says that, so to speak, that he's going to do whatever it takes. And, bonds, yields go lower, record yields. And so if they're not dovish, I would think that U.S. yields might spike a little bit and we might see a further move down in TLT. And I think it's kind of stretched a little bit too, even though it kind of came in and didn't close on the highs yesterday and is a little bit soft this morning. So that's kind of what I'm looking at. But I actually like, we could talk about some individual names if you guys
Sure,
like.
go ahead. That's right.
I actually wanted to, before we do that, Christian, I'm looking at this chart here. What are we seeing? I see a 5-day EMA, a 20-day EMA. Can you walk?
Yeah. So absolutely. Yeah. I've got the five period exponential moving average. I've also got the 20-day. Really, those kind of help me just see the short-term trend. Because I think sometimes in candlestick patterns, for example, we'll see like a really ugly looking candle, but if it doesn't break the short-term moving average, I kind of stay with it. But I think from a contrarian point of view, yeah, I mean, I think TLT sets up for a possible reversion back.
All right, so let's get to some individual names. And we haven't even gotten to Adobe yet, which was probably the top one on our list here. They had earnings yesterday after the bell, an EPS beat and a sales beat in the second quarter, and the Q3 EPS guidance a little bit light. The Q3 sales guidance pretty much in line, but a smidge light there. So earnings beat, guidance a little bit light for Adobe. Haven't even looked at the stock yet this morning, Christian. What are you seeing?
Yeah, I did not play Adobe for earnings. It usually, I do look at how names move historically, and Adobe just wasn't setting up for me, in terms of what it does historically on earnings day. So let's see if I could just bring this up. But yeah, I'm surprised that they're up this much, because if you see, if I can get this up on my screen. It just doesn't have a great reaction on earnings day. So, maybe this could give a little bit of further catalyst to the software names. I do think the software names have been looking a little bit tired, and I think maybe if which I don't know either. I'm not buying either that this meeting is that they're really going to come to any type of conclusion with this G20 meeting. It's great that they're going to meet and reopen, I guess, some types of talks, but there's a lot of sticking points. So maybe, for a couple of days, you see a little bit of a rotation out of some of those, less trade sensitive areas. I think we saw that a little bit yesterday. Some of the industrials really rallied. Biotechs have been hot the last couple of days with a couple deals on the tape. So, I'm kind of looking for more of a rotation into or a continued rotation into biotech and healthcare. I'm not sure if I'm buying yet the move into industrials. I like the GE setup that you guys are talking about as well. I think that's right on the cusp of kind of breaking that long-term downtrend. But what'd you guys say? 1250 was your level?
1050.
Or 1050, sorry.
Yeah. There was we like to look at the size in the book on that. So is there any stocks that you're picking on a little bit? I know you kind of like to trade an even book there. Is there anything you're short or any potential shorts out there?
Yeah, so I'll be short spies for the day, especially around. I might add to that if we get that first whipsaw move and it goes higher. I might look to kind of put a little bit more of this. And again, it's a spy hedge. My book is positioned long, but I think on these days I want to stick with the averages, and then kind of look at where I'm looking at is being choosy in software and. I like healthcare. I think healthcare has been an area that just really hasn't participated for most of the year, and it's kind of give some kind of herky jerky moves over the last few months. Kind of looked like it was going to go a couple times, but I think we can move up to like around 92. Wait for my chart to adjust there. Yeah, right around 92 in the XBI ETF. So that's the group that has me most excited is biotech.
That merger, right? That's got to kickstart some excitement, especially in an XBI because of smaller biotechs there. But you got a Reagan purchase there. I think XBI had 2 good days just because of that deal.
Agreed. Yeah. Now it's got to show the follow through, and as always, I kind of start with the ETF and then draw in from there and look at individual setups. Like I added one name. It's tough always to kind of add into strength. But I do like this RDUS. This is Radius Healthcare. Again, I'm looking for names that have just been in this consolidation for a while and are just kind of trying to poke their head out and go a little bit higher. So that's one name I I started yesterday, which is tough, right? It's tough to kind of add into strength, but I think with that base of what it's been doing for about 2 months, I think it's worth a shot for this thing could get going now.
Christian, do you trade or do you arbitrage the ETF against the individual stocks?
I don't right now. I mean, I used to do that much more as an institutional trader, but I just haven't been doing that much. I think you really have to have a good sized book to do that. I know Dennis does that, right? I mean, you'll do some arbs between index and single stocks.
Most of my probably the bulk of not the bulk, but at least probably 50% of my trading profits every year are just from index arbitrage.
Just index arb, right? And are you doing that sectors or are you doing that overall?
Yeah, usually. Well, it depends. ETFs, it all and I'm going to talk a lot about this at the trading summit, obviously tomorrow, and I've got some slides and some presentations on it as well. But it's what Joel and we've I've done this for 20 years and I used to do it automated as well. I'm kind of cherry pick it more now, like and doing a lot of sympathy. It's not like the pure I'm not going to buy all 100 Q components and sell the index against it. That's pretty much the bulk of that's high frequency trading. You're getting into too much high frequency trading and competing too much against them. So it's more I got a little spin on it. I'll just say that.
Nice.
Christian, can you give us a quick preview as for what you're going to talk about tomorrow?
Yeah, and absolutely looking forward to it. And I think I'm on somewhere around 2:30ish, but I have to double check that. But we're just going to be talking about swing trading, which is what I do the majority of my trades, and kind of how I look to set them up at the end of the day. I think one of the most interesting phenomenon is just the overnight moves. I think recently, but over time, the overnight moves are much greater than what we're seeing intraday. So it's a little bit counterintuitive to kind of come in. And I know, a lot of day traders will look for those opportunities right around the open. But I really like, what I've been doing mostly is taking off trades in the first hour. And I think the way that this market has been, with fades, we're seeing certainly a lot of fades. Once we get to like 10:30, 11 o'clock, it's like no man's land. And then you kind of set up and try to add some trades in the last hour of the day. So I'll be going over that and just, technicals and how I use them and setups and trading live.
All right, we've been on the line with Christian Fromhertz from the Tribeca Trade Group at @CFromhertz on Twitter. He'll be at the summit tomorrow. Christian, have a great day, and we'll see you tomorrow.
Thanks, guys. Look forward to it.
All right.
Thanks, Christian.
All right, 8:50 on the nose here, guys. 10 minutes before our final guest of the day, and still quiet. All quiet on the
rally.
Quiet.
Yeah.
There's a few individual stock movers here. We're still waiting. Did we get the Barnes & Noble report yet?
Yeah, we got that. Does it matter?
Obviously, it doesn't matter. It's getting taken over, but
Do you want to know?
Yeah, kind of.
All right, 26.
Kind of.
I mean, I can't trade. It ain't gonna move. I was getting taken over, but
26-cent loss versus a 22-cent loss estimate. Sales actually higher than I thought. Sales missed of $755 million versus
burning money. Physical bookstore. Why did they buy that? Anyways, okay. Sorry, I digress once again.
Comps down 2%, 2.3%. Okay, Barnes and Noble.
That sounds like a good investment. Okay, moving on.
Hey, you asked.
Jabil Circuit and Lazy Boy. Those are the two earnings we did not cover.
Yeah, we'll do JBL first. Reporting yesterday, Q3, adjusted EPS in line at 57 cents. Sales beat 6.14 versus $6.01 billion. Their Q4 EPS guidance was in line. Their Q4 sales guidance was also in line. And there you have it. Pretty much in line across the board.
Up 3% in the pre-market, showing some life. It's kind of whipsawed a little bit after the report, but when the dust settles, it looks like it wants to go higher here. If I was long this, I'd think about the couple highs we had back on the May the 15th and the 16th, 2882, 2888. So call 2880 major resistance up there. Joel, what are your thoughts here?
Same thing here. You did get that quick spike to 29, even right on the kisser.
That coincides nicely.
Yep. Now you're coming back down on that candle. Doesn't look like a ton is trading, but I was looking too. I saw one higher 28.22, Dennis, ahead of what you're saying. So that will be the first hurdle. But if you're looking for more, I agree. The pair of highs at 28.80 look like a good potential resistance point. And I just wanted to make one comment at what Christian said about the overnight movement and stuff. I mean, if you look at like the 15-minute chart of some of these overnight moves, they're so much cleaner than what you get during the day. And, if you could get something good, a good price like overnight and a good stop, I mean, you could wake up in the morning and something, it's 10, 15 handles your way. And if it continues, it continues. If it doesn't, it doesn't. But
I love trading pre-market and after hours. It's smoother. You don't have the high frequency trading shop that you do during the day, which is something I'm going to talk about tomorrow as well. That's the difficult thing. It's why I don't trade between 11 and 2 intraday, because there's just too much high frequency trading noise during that time. And these trades aren't smooth. The direction's not smooth. I love the open. I love the close. I love pre-market. I love after hours. Why? Because you have pricing inefficiency and the moves are cleaner.
Alexander Wang wants us to look at Amazon. We really neglect Amazon quite a bit on this show.
We do that? I like Amazon. I
like it, but it's like a $2,000 stock. I mean, I guess you could.
Is that why we neglect it?
Why?
No, I'm saying, is that why we neglect it?
I have less interest in following $2,000 stocks.
It's actually quite tight, though. I trade Amazon probably 3 to 4 times a week. So I do trade it a lot.
Okay.
I mean, obviously major components and most of your indexes there. And I talk about the index arb. So Amazon's going to be part of that arbitrage when I'm trying to do at least the statistical arbitrage of it, if not the index itself. But the stock's been on the comeback trail. I mean, everybody threw it away in May. Downside capitulation day there back on June the 3rd when everybody said, I got to get the hell out. 1672 is the low. It's been straight up ever since. But now you're starting to come back into the area where we topped out before, this 1950. So if you're coming to Amazon now, I feel like you're way late to the party. You're buying somebody else's profits. This thing has been up the entire month of June. So I think you're late to the party if you're coming in here now.
And when I look at this thing, I mean, doing daily levels on this is like nearly impossible. So what I do, I'll go to a longer term chart and I just looked, I see these are monthly highs, 1956 and 1964. Dennis, you picked out 1950. I'd say 1960. That major
Amazon, $10, 50, 60, sure.
Yep. Yeah, $10. I mean, who's splitting hairs on that? Yep. So that's what I'd be. I mean, you want it to get above 1960. You want to get back over 2000 again. So, longer term, I'd like to see it. That's major resistance for now. Let's see. Omar wants us to look at SFIX, Stitch Fix.
I trade that a lot.
You
do? I don't know when I started trading it. Yeah, it's a good one. It's because there's some action sometimes after hours in it. So I like trading that stock. Breaking out.
That's kind of random.
It is kind of newer. It's somewhat a newer issue, so it's still kind of active. Obviously, when you're trading after hours, you've got to have action, right? You're not going to go into something that's some small cap stock. I mean, no movement. So I got to trade. If I'm trading after hours, it's got to be the big guns. It's got to be news, or it's got to be something that has still a story. Stitch Fix still has a story. There's often some after hours action in it. I do trade SFIX after hours probably 2 or 3 times a week.
Okay, RG is saying Goog is more interesting. Google, let's see here. It filled the gap. Huh. I kind of took my eye off this one.
Dead.
Yep. After the earnings miss, we've come back up. We've filled the gap. I mean, we're right in this area, so I'd keep a real close eye on that trading action the day before the earnings. And what was the close on that day? The close on that day was 1103.63. We are above that. Let's just say, holding 1100 here. Good chance for it to rally.
We did miss the Lazy Boy earnings, so let's do that. Lazy Boy, as we all know, the Monroe, Michigan company, home of Christy Brinkley, as we all know.
Christy Brinkley, also Kaylani Ray Rafco, who was Miss America, I don't know, a couple 100 years ago, and she was on the swim team.
Oh my God.
He knows everything about Monroe, Michigan.
Also, you know what I'm surprised?
If Monroe, Michigan is a question on Jeopardy, a category on Jeopardy, you would rock all 5 of those questions.
And you know what? I'm surprised no one's ever mentioned a very infamous general that was from Monroe, Michigan.
We could do a whole show.
Do you know who I'm referring to?
Joel's great-great-grandfather. No idea.
No. Come on, chat. I know we got some old
Custer. Got it. There. I just guessed. I don't know. Is that right?
Yep.
Okay. Joel is from Monroe, Michigan, in case you're not getting the joke there. But LZB earnings yesterday, 64-cent EPS versus 70-cent estimate. Sales $453 versus $469 million. So a miss and a miss in the fourth quarter. What they say on their outlook? They said, they blamed tariffs and geopolitical uncertainty. There we go.
You know what else? And Spinner bringing it up here. We haven't talked about on the show yet. The chip rally yesterday. Holy, that came out of nowhere.
Well, that was G20.
It was sell the laggards or sell the leaders, buy the laggards yesterday, and nothing has been lagging more than the chips. Western Digital, great day for NVIDIA. I was up like $8, getting some follow through here this morning. AMD getting a little bit of love, not as much as some of the other ones because it hadn't sold off as much. Even Intel was showing some life yesterday. The chips, Micron, big move for Micron, up over $2 from the lows. I mean, just incredible movement there. Again, the theme yesterday was sell the leaders, buy the laggards. I don't know if you're going to see follow through on that this morning, but be aware when themes change. That was definitely a theme changing yesterday morning.
And you know what? If you pay attention to these our chatters here, both on pre-market and also on the Google, they'll keep asking about stocks. And I would say I don't keep track, but I would say over the last week and a half, I don't know if it's the same person or different person. They're like Western Digital. So they're eyeing it. And most of our people play from the long side. Obviously, we don't have a lot of short sellers in the world. But we were talking lean on the low. And the low was 35.97 before it hit 35.90. So it gave you a little shake and bake. But if you turned your head, then it was back up. So I don't know who it was in the chat that was on that, but good call. We'll hope the move can continue. We got one more minute, Dennis. I know you got a lot of stuff.
Dogs are barking. So look at your charts, and if something's been a dog and you've been short it for a while and it's been falling, be cautious. I'd be thinking about covering those shorts because right now the laggards had a really good day yesterday. The dogs are barking.
Okay.
All right, we got a couple minutes or 1 minute before our.
I'm gonna have to go here pretty soon.
Go.
I gotta get ready for my open, and I gotta get ready to catch a flight to New York City. So hopefully we see a lot of you guys out there tomorrow at the Trading Summit. There, pumped for this. It's gonna be exciting. Gonna learn a lot. I'm gonna learn a lot. We're gonna give a lot of information out. It's gonna be a good time. Be there.
All right, let me bring on our final guest of the day then on that note. His name is Ben Axler, founder and CIO of Spruce Point Capital Management, a short seller, or I think they maybe do some longs, but they're mostly seller focused. Ben, are you with us? Good morning.
Yeah, good morning.
How's it going today?
Hey, it's good. I'm happy to be joining you from sunny Miami, Florida.
So, well, it's supposed to rain in New York the next 3 days. So
That's precisely why I'm not there.
Ben, are you? What's your mood today? Are you nervous for this Fed meeting? Are you're over it at this point, or what's your mood?
No, I'm not nervous at all. Look, I think the Fed sort of telegraphed that they're looking at possibly accommodating. Do I think that's right? No. I think just that the economy has enough money sloshing around. Looking for places to go that it doesn't need a rate cut to keep it up. I think what's going on right now is the Fed looking into displacing. The administration looking to displace Powell, the federal chairman, is just unprecedented to try to force a price cut. So no, I think the market is sort of clearly a little complacent, sort of expecting a cut. If we don't get a cut, we could see a modest correction, but no, I don't fear anything today.
Let's just talk about your strategies. I know you like to play both the long side and the short side, and I know you really pay attention to the fundamentals. So after you drill down on the fundamentals on a company, do you just ignore the technicals, or do you have some simple method of technical analysis you like to follow after you do your technical research?
Yeah, it's a tough question. Sometimes, we try to find companies that we think there's a big misperception about what the intrinsic value is based upon that fundamental thesis. Sometimes, or many times, these stocks tend to be trading at 52-week highs. That in and of itself is generally a ripe area and ripe opportunity to find a good short. Having said that, given that we're in this heavily stimulus-driven market and investors are starved for growth, shorting growth stocks at a 52-week high can be quite challenging. You really have to be able to explain and discern why the growth story, has cracked. On the other hand, shorting stocks at a 52-week low can sometimes be easier. Why? Because there's less of a bid there, and sometimes finding companies that the fundamentals are already decaying and the growth story is cracked, and then shorting them at a 52-week low can be advantageous as well. So, every situation's different, every stock and every setup is different. And, that's sort of the art rather than the science of investing and trading.
So do you wait for the fundamentals to change? If you stick with the company, regardless of the chart indicator, if the fundamentals are still the same, whatever short-term news is out there, do you like to stick with the fundamentals, to exit? As we talked about the entries, let's talk about exits a little bit.
Well, the fundamentals are tough to time, right? There's some examples we've had where, we played the fundamentals correctly, but, we've been a little early. One of our big shorts was MGP Ingredients, the whiskey contract maker that, we believe the American renaissance of whiskey was certainly booming, but we were getting towards the tail end of that, and supply was catching up with demand. And we put a short thesis on our website, and, we're probably about 12 months early. But finally, I think the company's numbers are showing that, they're getting less growth out of that whiskey category, and the stock is now at a, 52-week low, and it was at a 52-week high. So, finally, when the fundamentals match up to the share price and the companies start to admit the challenges, that's when you start thinking about, an exit strategy, and when it matches up more closely with our view of intrinsic value.
Ben, we're going to be on a CIO fireside panel tomorrow, moderated by Tim Seymour with Salman Draghi from Kerrisdale. I'm curious, how willing are you and other firms, short seller firms, to exchange notes with each other, or do you keep your notes and your research close to the vest, or do you talk pretty openly with other short seller firms, or what's that relationship like?
Yeah, so look, we try to do a lot of our own fundamental, proprietary research in-house. There's no shortage of ideas out there, whether it's looking at screens or following companies that I've been following for years. Certainly, the short community is pretty small. We all know we all know one another, just like a lot of value guys know each other, and a lot of the big growth investors know each other. So from time to time we bounce ideas off each other, but I've gotten my best alpha and best ideas just by keeping my head down, looking, reading SEC filings, kind of, looking at screens and just trying to find stocks that have a low short interest where, nobody's thinking about the short case. I mean, I can give you plenty of examples of, where we found companies where there's maybe 1 or 2% short interest and nobody's talking about, hey, what's the fundamental challenges coming 6 to 9 months down the road, or how is this company, inflating their margins through aggressive accounting? So, that's just us. Everyone has a different tact, but, we like to do our own ideas internally.
And talk about how you know or how you decide when enough is enough, when you're wrong. No one's right all the time. You've obviously, you made some good calls. Some have not worked out. How do you decide how do you admit defeat and what goes into that thought process?
Well, look, I think a lot of the times the market, never assume that you're smarter than the market. The market will tell you when you're right and when you're wrong. And in some cases, investors, might not care about the short thesis, or they're willing to give management a pass because they're, using some aggressive methods, or they just don't care that the governance is skewed, in favor of management, and they want to buy. I mean, the other challenge is, frankly, in the short selling environment, and we'll talk about this tomorrow, is the move to passive and index investing. You have to understand sometimes who's on the other side of the trade. If you have an investor that just has to buy a stock when money flows, into an index or an ETF, I mean, you're not dealing with someone who's going to, read SEC filings necessarily and or think about, aggressive accounting too much. So, I think it comes down to price. It comes down to, what the chart's telling you. And, like anything else, every investor has to have a disciplined risk management strategy and, know when to cut losses and know when you're wrong.
We're getting a question from the chat. Do you have an opinion on U.S. steel?
I don't have an opinion. Haven't looked at it. I mean, generally speaking, steel stocks are commodity stocks. Boom and bust. But no specific thoughts on U.S. steel at the moment.
Okay. What advice would you give to someone who wanted to wants to start shorting stocks? They're afraid of the undefined risk. What advice would you give them?
Start small, come up with a plan of, stocks or industries that you're familiar with. I think the biggest mistakes certainly, I've made is when I've got involved with situations that I didn't research enough, that I didn't understand, that I thought I understood well, but I was missing something. So, if you're going to short stocks, again, know that you have unlimited risk. So you have to be able to manage that risk, whether it's getting stop losses or using hedges to cap losses, but make sure you really understand the company. I mean, there's no substitute for good due diligence, understanding what the catalyst is, when the earnings or sales are going to inflect lower, and invest in what you know. I mean, that's always been something that I keep coming back to, is I really have to feel like I know something better than the next investor, and that comes for me, through researching stocks months, sometimes years before I decide to short.
And what's your typical time horizon?
I'm sorry, I lost you there.
What's your typical time horizon?
I mean, we try to look out, 12 months, I think. Like when we're looking at fundamentals and industries and changes in competitive dynamics. I mean, when we're putting our short research on our website, sprucepointcap.com, we're trying to take a forward-looking view, not necessarily backward-looking view in terms of what the competitive landscape is going to be, what trends are happening in pricing, for example, we found, companies that had sort of abnormal, growth cycle, maybe that we think is coming to an end. So, trying to define those catalysts over generally 12 months is kind of, where we're looking at.
Ben Axler is the CIO of Spruce Point Capital. As I mentioned, he'll be at the Trading Summit tomorrow. Ben, have a great rest of your day, and we'll see you tomorrow.
Yeah, looking forward, and thanks for having me at the conference tomorrow.
All right, have a good one, Ben. All right, 9:09. That will be it for today's show. Tomorrow's show will be live from the venue for the first time ever. We're doing the show with the three of us in the same location. Has never happened.
Is that true?
Yeah, that is true. I have never done the show in Dennis's presence. So this will be interesting for tomorrow. As I mentioned, we're going to take Friday off, but tomorrow's show will be a fun one for sure. I think we'll all be a little bit hyper, but hopefully we can get through the hour unscathed. I want to thank all of today's guests, Ben, Christian, Karen. Thank all of you in our chats on YouTube and premarket.benzinga.com. Please remember, all the information on our show is for informational purposes and not meant for investing advice. It's not too late to buy a ticket to the summit tomorrow. bzprofit.com, promo code PMP50, all caps. If that does not work for whatever reason, you can always try PMP15. And that's it. So everyone have a great day. And we will talk to you, I guess, tomorrow. Joel, any last words?
I mean, it's a Fed day. Dennis and I are both going to be flying on this one. So, I mean, we're right now, short term, we're unchanged on the session. That's also mid-range on the session. Bumping up against the door of the old-time highs. If we could clear that 36.50, I see a couple daily highs moving up to the old-time high. I don't know how the markets react, but I don't expect to see the Fed to be as dovish as Trump was. What that's going to do for the market, I don't know, but that's our take. And really looking forward to the event. If you're in the chat and you're going to be at the event, come up and tag in our shirt. Yeah. Just
do that. I've had people email us at premarket@benzinga.com if you're going to be there. Let us know what shirt you're wearing. We'll have name tags though, but come
over
up.
100 people in the trading room. I think we're up to like 120 now. So there are going to be a lot of people, but you're coming out. We want to try and give you some individual attention. So make sure you get it. You get your money's worth.
All right, how's it going, folks? We'll talk to you on